Time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. We're back with Brian Madden. He's Chief Investment Officer at First Avenue Investment Counsel to talk about, Brian, advice that you've got for aggressive investors, more conservative investors as well. Why don't you take it from there?
Yeah, of course, Paul. This is, we talk about this, counting our blessings, looking ahead at 2024. And of course, it's very easy to forget how important it is to do that when you read about wars and inflation and massive layoffs and insolvencies. But there are a lot of things that investors should be grateful for looking ahead at 2024. And so starting at the most conservative end of the investing continuum, we strongly believe that the epic bear market in bonds came to an end a few months ago. So that's after two back-to-back down years for the bond market in Canada and the United States in 2021 and 2022. November marked really a dramatic turning point. The bond market in Canada was up more than 4.5% in November, almost 5% in the U.S. That's almost the whole year, really, worth of normal returns in a month.
And it's reflected in declining yields. Just what you're talking about there, the bond market is funny in a way. People need to be reminded. I think that when bonds rally, yields decline.
Yeah, and that's a great point, Paul. So yeah, what we're talking about is rallies in bonds, the prices going up and yields falling as investors start to sniff out the end of the Fed rate hiking cycle. So if you accept the premise that the bear market in bonds has indeed truly come to an end, what you're left with looking forward, if you can forget about the scars and the trauma of 2 years of back-to-back losses last year and the year before, is really the best setup for ultra-conservative investors we've seen in 15 years, where cash earns 5% and GICs, depending on the term, earn a similar amount, and bonds, depending on where you're looking in terms of maturity and credit quality, are earning anywhere between 4.5% and 6% and more if you move into high yield credits. So, at these sorts of yields and expected rates of returns, bonds do deserve a fresh look and a meaningful weight in a properly diversified portfolio in a way that they really haven't warranted and been able to compete for effectively since pre-financial crisis 15 years ago. Okay,
so we want to talk about dividend stocks as well as growth stocks, and we've got about 2.5 minutes or so to do so. So why don't you start, give us something on dividends?
Sure. So dividends are a really important part of total returns in a portfolio. We know this, our clients know it. One of the mandates we manage is a dividend growth mandate. And so we think very simply what investors can look forward to in 2024 is more dividends. Now, why do we say that? Because the data substantiates it. For the TSX Composite in Canada, dividends in the aggregate have increased in 27 of the last 30 years. So, it takes like an economic hurricane really to slow the immovable force of dividend growth for Canadian companies. In the United States, that's even more so the case, where dividends have grown in 46 of the last 50 years, going all the way back to 1973. And just to kind of put a bow on it, so to speak, dividends have grown at more than an 8% compound rate in Canada over the last 30 years, and more than a 6% compound rate in the United States. So put some dividends in your portfolios. It will serve you well in 2024.
Okay, stocks, including growth stocks. You've got a couple of boards here that I can show to viewers. These are the top performers on the S&P 500 this year, and we go back in time to 2021 as well, or an earlier year. So here's 2020. First of all, the top performers on the S&P 500. You can see some absolutely eye-popping numbers there. Tesla had a remarkable year, and then you can see the others: Enphase, Moderna, Etsy, and SolarEdge. Some of those are well-known names. Some of them is a little less well-known. Here are the top performers year to date this year on the S&P 500. We see five different names: NVIDIA, Meta Platforms, Royal Caribbean Cruises, Carnival Cruises. The cruise lines have done very well, and Palo Alto Networks. What's the takeaway here?
So, yeah, I mean, we suppressed the middle 3 years, Paul, I think for brevity's sake, but really the key takeaway here is innovation, ingenuity, and entrepreneurial chutzpah are also immovable forces, and they are well represented in the collection of companies that comprise the S&P 500. So whereas there's always going to be macro headwinds and macro tailwinds, the astute growth or momentum investor is always and everywhere on the lookout for those companies that are doing something good for shareholders, good for society, something disruptive, and something that changes everything. And every year, someone is doing it, and you want to be on the lookout for those kinds of names, and that's exactly the ethos we bring to bear in managing our momentum mandate. And there you see the cast of top winners this year.
That's Brian.